All right, it is the escrow shortage paperwork season. Just got ours for the year. So we have an escrow shortage of $2,610. And I knew we were going to be at a shortage because our homeowners insurance more than doubled, like 125%, something ridiculous.
I'm going to go out of a limb here and say that she probably lives somewhere in the South because these insurance companies are just going crazy with these annual premiums. And, they're saying things like natural disasters are causing this, inflation. It's just getting out of hand. And more I'm seeing videos like this where we have mortgage escrow increases and large shortages, like she mentioned, with over $2,000 in a shortage. That's a lot of money to have to front to get, to be able to afford the property taxes and insurance. But we'll keep going. I digress.
I did shop the rate around and we still had a massive increase. So it wasn't much I can do about that. Now, if I don't make this additional $2,610 payment by December 31st, beginning January 1, my new mortgage payment will increase an additional $300.
That's a lot.
Well, here's what I'm going to do from your financial big sis. I am going to pay the escrow shortage. I'm going to pay the escrow shortage because I do not want my payment to increase. That to me just feels like a long-term commitment, having this extra $300 a month. I'm not interested in it. And I do feel like with your mortgage, between the insurance and taxes and all that stuff, it continues to increase all the time. And I'm not going to pay this high of a mortgage payment. Nope. So I'm going to make the escrow payment by December 31st. If you got your escrow paperwork, what you doing?
So shout out to Common Sense Tanya, your big financial sis on TikTok. I would do the same thing. If you have an escrow shortage, it's really, really important that you pay all of it off. So that way your monthly mortgage payment does not increase. And we can kind of go into this idea of escrow accounts and why, in my opinion, they're not great for the borrower when it comes to when you sign up for a mortgage. And oftentimes, if you put less than 20% down, I think almost every time you put less than 20% down, you have to have an escrow payment. And there are some circumstances where I know some lenders will allow you to eventually get out of it. But a lot of times you're stuck with this. And I think in an FHA loan, you also are stuck with the escrow account. And that can be an issue when it comes to property taxes and home insurance, specifically over the past 5 years. If you're a homeowner, you're probably aware that the fact that your property taxes have gone up and your home insurance has gone up as well. Your mortgage is fixed. I hope it is. I hope you did not get an adjustable rate mortgage, but your mortgage is fixed. But your mortgage has the potential to increase. And when you have these escrow accounts, it can go up a few $100s like it did in her situation if the escrow shortage is not paid off. And so one thing you always have to be doing is shopping for good home insurance that make sure that you're not being overinsured. A lot of these home insurance companies are going to overcharge you. They're going to overinsure you by a large margin. And you have to be aware of that. You can't let them walk over you. Otherwise, you will be paying a lot of money for something that, more than likely you're not going to have to use. Now, I'm not saying do underinsure yourself at all, but I am going to say be sure that you're reading everything line by line. Another huge thing I'd recommend is try your best to buy a home with 20% down so that you can avoid this escrow account at all costs. Now, I know that's difficult nowadays just to save that amount of money. But if you do have the capability to do it, you should do it. Don't think about this idea of saving your cash or holding onto your cash, because in the end, you're going to have to pay more by escrow on a monthly basis. Your monthly obligation is going to increase when, in reality, you should be trying to save that money outside of an escrow account in a high yield savings account or a CD, something like that, that is growing with interest, that you have a set amount of dollars that you just put in there every month. And all you have in terms of your monthly obligations is your principal and interest payment. This is the dream scenario. And I know it's difficult right now to get that dream scenario, but I would suggest you try and pursue it if you're looking to buy a house. And right now is the time of year where we have a lot of that escrow shortage paperwork coming in. For me, it's in February. For me, that's when my bank does their escrow analysis. And thankfully, I should not get an increase because there's also this thing going on right now in the housing market where houses are not appreciating like they have been in the past. In fact, there's some depreciation happening, which we'll talk about in a separate video. But there is some hope, I believe, for these ridiculous increases in mortgage payments because of property taxes and insurance. And I think if you're someone that lives in the South that has just been getting, destroyed by these increase in property taxes, there is relief. And there's another person I want to get into that is kind of explaining, the mindset of people that perhaps bought a house for the past few years and are just struggling to even continue to afford it due to these escrow payments.
At what point do we decide that we can no longer afford our homes and just move out of them? Like, what is the percentage per month that our housing should be of our take-home pay before we're like, okay, this is a problem?
I think 25%, 30%. If it gets above that, I think you're considered house poor. And I know a lot of people that it's well above 30%. I mean, at one point it was above 30% for, most people in 2023, 2024, when you have 7% interest rates. Most people are not making $10,000 a month. So even if you have a great debt to income ratio, the bank's going to loan you, up to 40% of your take home pay, probably more if they see, you have a stable income, there's two incomes, but you just got to be careful nowadays because right now, people are, at probably 30 or 40% of their take-home pay being allocated to just the house, which is pretty crazy, but let's continue.
Because I had no problem affording my mortgage. I'm still having no problem affording my mortgage. What terrifies me, though, is that in January, I received a notice from my mortgage company that my escrow was increasing. My monthly payment was going up by $1,000 per year, so $70 per month. It was like $76 per month. And it was like not super big, but we had a home insurance increase. We also had a tax increase in 2024. Well, the more I thought about it, the more I ruminated, the more I realized that escrow overage, the escrow increase was only enough to cover the home insurance increase. It was not enough to cover the tax increase. And that's probably because we got our tax increase at the very later end of 2024. So I've been preparing for the past 3 months, 2.5 months. I've been preparing that in 2026, my escrow is going to increase once more.
This is a good idea.
So I'm taking steps now. We're currently paying off credit card debt, so that's where our extra money is going towards. But once the credit card debt is paid off, I'm going to put extra aside to cover the increase to my taxes. And then got news again that they're going up again in 2026. I love it. So it is to a point where, depending upon how much they go up, my husband and I may need to consider our long-term goals and decide whether or not we want to move out of the town that we're in. But the frustrating part is that so many towns in New Hampshire are like this. We don't want to live in one of the larger areas, so we have to accept that this is a part of living in a smaller area. But this is the first time that I'm genuinely concerned and scared about it, which is frustrating because we haven't even been in this house for a full 2 years. And it's shit, not even after a full 2 years, and now we're contemplating whether or not we're going to have to sell it one day. What are you going to do?
This is the reality, unfortunately, for a lot of home buyers right now, because again, we're just in a unique time in the housing market where we had crazy appreciation, and the appreciation is continuing in a lot of places. It's slowing down in some places, quite a bit actually. And because of that, like she said, she's in New Hampshire, so the Northeast is probably still continuing to see appreciation. And because of that, you're going to see property taxes increase. You're going to see home insurance increase, because as the property value increases, there has to be, more that you have to cover on a home insurance policy. And also there's just more value to tax from, a property tax standpoint. So it is kind of this interesting dynamic of people obviously want their homes to increase in value, because one day you want to sell it and you want to have a good profit you make from it, but you're going to have to pay for that as well. In the interim, if you hold on to a home for, 3 to 5 years, you have to make sure that you can afford to have that house for 3 to 5 years. At the end of the road, when you do decide to sell it, hopefully it's a good market where your house is appreciated healthily and you can make money off of that. That's really the argument that I make in terms of why I believe buying a house is better than renting, because this idea that, again, a lot of people I see online say that with renting, you don't pay property taxes and insurance. And that's not true. You are paying property taxes and insurance. You're paying the landlord's property taxes and insurance. That's built into the payment you pay them every month. So in that regard, in my mind, you are burning money. You're throwing it away because you'll never get it back. You'll never get that money back with at least owning a home. I'm not going to say you're going to get your money back 100% of the time, because there's obviously situations where if you put 0% down, 1%, 2%, 3%, and then decide to try and sell it a year later and it's a down market, you could lose money on that sale. Like that's an issue. So you can, though, set yourself up by putting, 15, 20, even more than that percent down, and you'll have equity bought in to protect yourself from a large correction in the housing market, because more than likely we're not going to see a correction of housing prices go more than 15%. Again, I don't know the future, but I can look at the fundamentals of the housing market, see we're in a shortage around the country of homes, and probably guess unless there's huge foreclosures, that's just not going to happen. And again, we could talk about that in another video, because so many doomers talking right now about the housing market and things like that. And this is obviously directly related to that. But yeah, we are in that time right now where we have escrow payments, escrow shortages, and you need to protect yourself. You need to always have money saved on the side to be able to account for any increase in your escrow payment that results in a shortage. And, hopefully in the next year or so, you get money back. Hopefully you start to see that number decrease. Again, realize that, home buying is a good thing, but we're just in a weird market. We're in a weird market, and you need to prepare yourself, because we don't know what's going to happen at this point in time. Though I can venture to guess over the long run, if you hold on to your house, it's going to appreciate. And that's what matters most. Think long term, don't think short term when it comes to buying houses. Otherwise, you will get in trouble, and I don't want to see that. So thank you so much for watching the video. I hope you enjoyed it. Please feel free to like the video, subscribe as well, and leave any comments. If you've had your escrow go into a shortage and you've had to come up with the money, or just take the monthly payment increase. I hope that's not you, though. And until next time, I'll see you in the next one. Peace.